morning. It's Monday, 7th of June. It's Signal Centre Talking Ball, and it's Jamie and Steve. How you doing, Jamie?
Yeah, very well, thanks, Steve. It's another week without Joe. I feel like we've been here before recently, but let's see if we can hold it down again without him.
Yeah, I think we can. We'll look to crack on with the news headlines and then dive into the technicals. Remember, anyone watching live can ask us to take a look at different markets or run through analysis that we're not looking at, and yeah, ask away. We're taking a look at the latest headlines. German economic recovery. Oh, let me just jump back to that. Reservations continue. The German IFO Business Confidence Index slipped to 92.3 for June from 93 previously. The IFO stated that worry lines in Germany are getting bigger, with a significant dip in morale in industry and retail. I think we're seeing that globally as well. Expectations are also getting more pessimistic, although there is no sign of recession at the moment. US inflation expectations revised lower. US final June reading for the University of Michigan Consumer Confidence Index came in at 50 from the flash reading of 50.2. The one-year inflation expectations index edged lower to 5.3 from a flash reading of 5.4. The decline in inflation expectations triggered fresh doubts over very aggressive Fed tightening. The Fed rhetoric causes further confusion. So the US St. Louis Fed President Bullard, inflation will come down if all goes to plan. While the front loading of rates is a good idea in this situation, he added that he would like rates to increase by 3.5% by the end of the year. Over the weekend, San Francisco Fed President Daly stated that markets have priced in a 75 basis point increase for the July meeting and that the Fed should get that increase in. There was still an important element of uncertainty, especially given the dip in inflation expectations from the flash data. The rhetoric maintained further uncertainty over Fed policy. This led to dollar overall edging lower, a net increase in expectations that the Fed will decide on a 50 basis point rate hike in July rather than a 75 basis point hike. Firmer equity markets also limited potential defensive demand for the US currency. And short euro positions at a 2022 high. CFTC data recorded an increase in short euro positions to over 15,000 contracts in the latest week, and the largest short position since late 2021. G7 meeting in focus. This will continue on Monday with developments surrounding Ukraine and wider economic policy, an important focus. So that's what we're giving as the fundamental headlines, and we can dive down now into the technicals. I'll start off, well, I've got indices up, but I'll start with cryptos and dive down into the rest of the markets. I'm picking up a lot of feedback on your mic, Jamie. Can you just mute it just while we go through this?
Yeah, sure.
Right, so let's take a look at the weeklies on Bitcoin. Very, very quiet week. As you can see, last week, previous to that, we had the big break through the this really important support level around about the 28,800 area. And but last week's must have been the smallest range we've seen for a very, very long time indeed, almost going back to around about 2020, when the last time we saw these sort of levels. Just looking at the candles, it doesn't look like we've had a smaller range than that since then. So although it was slightly positive, we ended up slightly higher on the week. As you can see from the daily chart, there wasn't really much to write home about. We managed to get above resistance at 21,700. We're trading just below there now. We've got a 21-day moving average coming in where the next level of resistance, as we see it on the charts, is around about 23,000. But for me, I wouldn't get too excited about any type of bullishness in the crypto or Bitcoin market. Obviously, Bitcoin feels like it's still leading all the alternative coins until we really get much above 23,300. Then we could have a retest of the 28,800. We doesn't feel like we've had it yet. Feels like we could at some point, but for me, that would still signify a lot of work to do for Bitcoin to recover to anywhere near what the majority of the market expects from that. For me, it's still a negative bias on this. On the 4-hour chart, we're looking at this inverse head and shoulder potential. So that's still looking good. I've drawn in a neckline. Obviously, we're above the neckline on the downward sloping trajectory of this neckline trend line. We're above there, but we haven't managed to get above the neckline of the right shoulder. So for me, 21,700 is key. A move above there, and it looks a little bit more promising. So that's the level to watch. A breakdown below the 19,700 is very negative indeed. We're back. That'll take us back below the 4-hour trend from an Ichimoku point of view as well. Taking a look at commodities, gold. I've been very focused on gold of late. My patience is running out a little bit with it. We've obviously saw the dollar sort of like come under a little bit of pressure with the euro going into Friday. So we've seen a little bit of a gold holding on, a little bit of recovery. But overall on the week, it did finish lower, and we had a little bit of a late spike on Friday down to, I think it was 1817. We'll take a look at that. But the weekly chart still, we're below middle of the range for this, so still under pressure. Really needs to get back above the 1878 80 area to recapture a little bit of upside. Down below, we've posted some higher lows, so that's slightly positive, but the last 2 weeks have been negative. On the daily chart, we've drawn this downward trending channel, which is still pretty interesting, and really need to push back above, as I say, the 1879, 1880 level to get me all excited about this. We're still below the 21-day moving average. That's coming in at 1843. Resistance today, I would say, between 1843 and 1850. That'd be the level to sell into. 1857, a break back above there, and maybe potentially retesting the more recent highs on gold. In terms of oil has been under pressure. Doesn't feel like it when you go to the petrol pumps and try and fill up. It feels like it's gone to the moon, but hanging around. WTI crude oil hanging around $106. We managed to get down last week, down to test just in front of the $100 psychological level, got down to 101.30 and bounced from there. We've had a slightly more positive start to the week. Let's take a look at the daily chart. And we've got this potential trend line, only 2 points on the trend line, so it's only a potential trend line. That looks like a bit of a level of support, a break below the 101 level, and we really would be under pressure. We can probably remove this previous downward trending resistance line, but you can still see we're under pressure until we can manage to recapture ground, maybe as above 113.50. really, the 21-day moving average coming in there. So this little bit of a bounce that we're seeing from this potential support has sparked a bit of life into oil. The similar levels in Brent crude, we're trading at 108.80. The 21-day moving average coming in at 115.80 on the Brent side of things. Have we got a nice little trend line coming in here anywhere? That's not bad. That's touching right. 1, 2. Well, you could maybe say that's sort of third point, fourth point. So yeah, let's really sort of like look out for that. If we extend it right, that'll give us a nice little trend line to watch. A break of that, obviously, maybe a break below 104.80 even would give a little bit of a spark to the downside, maybe also. I can dive into, let's not forget about FX. Joe will be rolling over in his on his sunbed if we forgot about that. Daily chart we're looking at, as we can see here, euro against dollar. sparking a bit of interest. As we said in the headlines, it's the biggest euro short position for over a year, and have we got a potential for a double bottom here? Really looks quite nice how we've bounced quite aggressively off the lows. For a second time, we stalled around about the 103.50 area and have bounced really nicely. Challenging now the 21-day moving average, resistance above, just above 106.07. That would a break above there, and further upside would be seen. That would be further dollar weakness. So that would be potentially pretty decent for the gold price as well. Obviously, dollar weakness should see a bit of a lift in gold prices. So really going against where my head is at with gold prices on the short-term basis anyway. Sterling against dollar cable. We're looking at the bounce from 121.68 over the last over last week basically, and still looking slightly positive, approaching the 21-day moving average, coming in at 123.74. Above that, we've got resistance at 124, which was the high of 16th of June. So a really nice bullish engulfing has led to further upside consolidation on sterling dollar. So nice there. Dollar yen has topped out a little bit for the time being. The high of that 136.70, and we've seen a bit of a evening doji star formation, and that's putting pressure on the dollar yen. So similar sort of levels, we're looking at dollars having that little bit of weakness coming into the market. So levels of support 134.24 on dollar yen. Quite a quiet day on Friday. Resistance coming in at 135.32, so quite a nice tight range. But above that, obviously, 136.70 to 80, we should see further upside. Support from the 21-day moving average coming in at 133.21. So again, quite a nice little bit. We can probably draw a trend line from here, connecting these 3 or 4 days that we had here. And yeah, even if we bring in the Ichimoku cloud, it probably give us a good indication of the support we can see below in dollar yen, but potential for a correction. So let's not deny that. Aussie dollar remains a little bit under pressure. Again, we've got this typical potential double bottom formation that we've seen in euro dollar. Prices looking at support coming in anywhere between 68.36 and 68.70. Resistance above coming in at 70.68. We're trading at 69.34. And again, 21-day moving average coming in around about where the Ichimoku cloud resistance will be at 70.50. Indices, quickly jump into indices before I pass over to Jamie on the single stocks to take a look at what's going on here. We saw a nice little recovery from last week. Let's take a look at the Dow Jones. Friday's price action, obviously very good indeed, really strong rally. And we're actually challenging that 21-day moving average. I really like this as a moving average. It's always something good to watch. Gives us an idea of where the average price is for that month. For any month, in fact. And price action today off to a good start also. So we got this nice, really strong, almost Marubozu-like candle. If we break it down onto the 4-hour chart, we can probably see the signs of a nice inverse head and shoulders, which is played out rather nicely indeed. We got this really aggressive sell-off, neckline forming. And we had this nice little area of price action here before eventually breaking higher with the 2 o'clock candle from the 24th of June, and a nice aggressive move up. The measured move target, oh, let's not extend that line. And let's see where the measured move target would be for there. We're not far away from it. So I would say that sort of like is close to completing, or even would accept that as a completion. So nice little recovery in Dow Jones. You can see the same sort of price action in the Nasdaq. and that's pushing higher towards the previous head and shoulders formation that we saw. And I'm sure we're going to see some resistance between the 12,400 and the 12,900 area, but nothing really slowing down on the indices side of things. S&P showing a bit of a gap on the chart from oh, this is a 4-hour chart as well. Let's see what that looks like on a daily chart. Yeah, it looks like that sort of like might have gone down for a short period of time. Yeah, looks like a bit of a gap on the chart, but that's between, yeah, I suppose it could have been from Friday to Sunday's price action, and it's pushed up rather nicely indeed. Looking at the next level of resistance, really, well, anywhere between 39.86, we obviously got the 4,000 that will be a psychological level, all the way up to 4,200, and decent resistance of 4,076 on there. Quickly look at Germany 40. We haven't quite seen the same recovery that we've seen on the US side of things, but there is potential. It's running into resistance now with the Ichimoku cloud. Next resistance coming in at 13,440, and above that 13,672, and there's a little bit of a gap also just above there. And finally, we finish with FTSE. Nice little double bottom formation that we can see here. Looks to be confirmed on that. Potential for a move higher. If we take it from, say, here to here and project it higher, that would look at a move really back up into the meat of the previous stall on the sell-off. So looking at really 7,400 as a potential target for that double bottom formation. So something to definitely watch out for. Right, taking up enough time. Jamie, over to you on the indices side of things.
Thank you, Steve. We'll jump in to start with our biggest gainer and loser. Our biggest gainer being this USAC or USA Truck. You can see that price really did jump up here. It's one of these ones where it's just floating in the middle of nowhere. But there it is, up at $31. This comes off the back of shares saw following agreement to be acquired by DB Schenker in deal valued at 435 million. So trading at 10 times the volume. That was on Friday. But yeah, a really nice, well, 112% move. So a nice one to be on the right side of. Conversely, our biggest loser of the day is JCSE or JE Cleantech Holdings, which was down 28.7%. It was actually down a lot more at one stage if we get out the percentage measurer. So from the previous day's trading, so that would have been the Thursday, it's actually quite a nice breakout above this resistance level we had. But this is why you do trade with a stop loss, because if you'd have sold right at the bottom of the next day's move, it actually was about 61% that it fell, but it was bought up throughout the day. So only down 28.7%. I say only, that's still a lot, but could have been much worse if we closed near these lows. I've been having to think, Steve. I've decided it's time to shelf boxed. We look at it every day. I think it's time that we move on. I need to put it behind me. Just accept that these 30% moves are going to happen every day and that no one really cares. So goodbye boxed. A nice 29% move to finish it. It'll probably be down 50% tomorrow. Goodbye, it's going. Let's get next. And Revlon too. Revlon's off the scene too. I can't be looking at any more. Another 10% move. Great. Good job. See you later. Okay, I feel much better after that. We'll check out the stock heat map, and I tell you what, we'll actually look at the weekly performance. So this was the percentage move for the entire of last week, and you can see it was such a good week percentage-wise for the S&P, which reflects in the chart Steve was just looking at. But all the big names: Amazon up 13, Microsoft up 9.4, Google up 11.26, Apple up 8.91. I mean, you can see Tesla up 15% as well, hiding in there. The only thing that struggled, as we mentioned last week, was the energy sector, which, like we said, perhaps for us, everyday people, is not such a bad thing, having slightly lower prices there. But overall, a really nice week. If we just zoom in for what happened on the Friday, it was a very strong close to the week, actually, with Google up 5%, Tesla up 4.5%. I mean, you can see all that. So Even the energy sector did rally towards the end of the week, which gave it a slightly better finish. We'll jump into a couple of these, and on Mondays I like to look at the weekly charts and just see if there was any significant weekly closes. Starting off with Apple, we'll get rid of the volume so it looks a bit easier in the eye. We noted that the previous week, so that was not last week but the week before, closed below this 38.2% fib. Well, we regained that completely and closed right above the previous week highs, which is a very good sign for Apple. I thought if we get another close below here, 50% Fibonacci retracement from the pandemic lows looked imminent, but we did regain it, so at least for the time being, Apple is on the right side of things. We can change this into support now, actually. There we go. It's now above it. So where next? Drill down to the daily. We've got quite a few gaps, actually. We've got this gap that hasn't been filled quite yet at about 142.50, so that could be the next stop. Equally, there we've got the swing high here of 150, which would also be a psychological level to some extent. So that's what I'll be targeting. We have had quite an impulsive move upward. I mean, the last 5 days trading have all finished in the green, including a few gaps up as well. So we will see if Apple Bulls can maintain that into this week. I think we're working up on the futures market, so perhaps we'll get a bit more buying pressure today. Which other ones did I want to look at? CMC, so this is Commercial Metals Company, produced this really nice bullish hammer on the weekly chart. I actually noted this as something that was possibly about to start breaking lower after we had this gap down after earnings, but Friday was a really important close again. Here we go, let's get back to the weekly. Holding on support level at least for now. Volume is slightly above average. We'll see if this can sustain the rally. It has been quite a nice uptrend for a little while, but it does seem to be topping out a bit, struggling to get back to these previous highs, posting a lower high in May. So we will see how that can get on. GME I want to look at just because it didn't really do a lot last week. It almost feels like it's coiling for some kind of bigger move, which I think I noticed on the daily chart if we zoom in. Just not a lot of movement. It's been really ranging between this 114 and this 61.8 fib we have here at 152. If you look at that weekly, you can see we've been stuck in this range for the best part of 4 weeks, almost a month now. It's difficult to say where we think this will go. I mean, we have a bit of might have a trend line resistance we could kind of draw in there, so maybe we head towards that. But as of yet, this GME for me is a bit of a sit and wait to see which way we get a break here. Until then, I think it could be quite choppy between these levels. Google, yeah, we'll check out Google. Gapped up, really nice Marubozu candle into resistance. I said that right, probably the first time in my life. Really strong Marubozu candle on the weekly chart too. So a pretty good week for Google. I'd have liked to have seen the volume a bit higher, but you can't have everything, I suppose. I'd expect some sellers to try and defend this level. It is a previous resistance, but we will see where price opens up today. If we don't get a hold of this, where can we be looking? We could take a Fibonacci from the entire move. If we do that, let's chuck a few of these on. So look, this 50% lines up with this previous support here, so perhaps that would be a nice level for sellers to try and get back in to the market. So that's probably what I'd be looking to target if we do get a break above this resistance. We'll quickly flick through a couple more. Moderna is clinging on to this 120 level. Just about. I thought it was going to break through it the week before last, but it didn't, and it's rallied into this previous resistance, so holding on for the time being. NEO has gapped up last week. Again, a pretty important close. We're right on this previous resistance which we had here. If we get a break above this, I'd like to see a close above on a weekly chart, but we could see this double bottom we've got marked here in these blue lines take place. And if we did get that, we said we could be seeing a move up to about $43. So potential for some more upside for NEO if we do get that close. FIs we'll quickly look at. We said how this found support and it had a really nice rally last week there as well. Volume is a bit lower again, so not completely convinced by this still. I still think there'll be a lot of selling pressure coming in around this 55 level, perhaps even earlier, to be completely honest. Roblox had a really nice close as well. We talked about this double bottom potential. Closing above most of these wicks we have here. Volume slightly picking up, so certainly a bit more convinced with this. Although we are in a downtrend, the volume is much nicer, and it feels like we've had a pretty extended sell-off. So, I mean, a rally up to this level we've marked here at 52 wouldn't exactly be a huge rally in the grand scheme of things. If we take a Fibonacci of that, we're not even hitting the 38.2. So I think potential some upside on Roblox before we do see a bit more of a sell-off. We'll finish off. I've got EasyJet marked. Yeah, EasyJet's at this. We talked about this with Joe last week, but right at the bottom of these pandemic lows, so not having a good time. EasyJet, Lloyd's, oh, nothing there. I'm not sure where that's marked. And lastly, Tullow Oil. We had this symmetrical triangle type pattern, which on a weekly chart, I think if we have a look there, so this was last week's trading just here. I'll zoom in a bit. We broke through and closed through that upward trending support, and this is obviously today's trading because it's just open. So potentially some more room for downside here. I look for bulls to be getting back in at kind of 45, and then if that fails, probably down at 40 as well, where there's support marked. So all a really nice week in terms of percentage moves last week. We'll see if much of that can be maintained into today's trading.
Thanks a lot, Jamie. Nice round up there. Right, we're going to dive into the gun to head challenge. Just to remind everyone what we do on this, we basically, both of us today, we'll pick an asset in any market, any financial market, commodity market, anything like that, and we will place a trade idea on it. This is meant to be sort of spur of the moment thing. We're going to enter at market, have a stop and a target. We always look for at least a 2-to-1 risk reward. Sometimes we have a bit of fun with this and look for something a little bit bigger. Our win hit ratio on this is around about 40%, slightly higher, I think, in Jamie's case. Trade ideas expire at 9 p.m. or when the stop or target is hit. So we do share that. Joe's the man with the Excel spreadsheet and keeps monitoring that. So we will just provide Joe with all the trade ideas we do this week, and he'll be able to upload it all next week. Just taking a look at what we did on Friday. Friday was a very, very poor day indeed. I went short of euro dollar. We'll play it out. Got stopped out on euro dollar around about 3 o'clock in the afternoon. It wasn't good. Jamie and Joe went the same way with the indices and got caught out on that as well. Bit of a move higher in S&P, stopped Jamie out, and Joe move higher in NASDAQ. He got stopped out pretty quickly as well. So you can see all these trade ideas on our TradingView channel. We publish them live shortly after we broadcast them. And yeah, have you got anything lined up yet, Jamie, or do you need a bit more time? Oh, you've gone mute.
That was good of me. Yeah, I can go, but if you've got one lined up, you go for it.
No. I'm just taking a look at the dollar overall. Obviously, I went short of euro dollar and got stopped out, and sort of like it makes me think: is there a little bit more dollar weakness to come? Was I wrong on Friday, trying to pick the top and see a reversal? But it seems to have continued. So, yeah, I'll let you go first, and then I'll try and find one while you're beavering away.
Sure. All right. Here we go. So I've been struggling a little bit this morning to find something I really like. But the one thing I have found is US dollar CAD. Now, we talked about potential for some more dollar weakness, but we have had a bit of a sell-off. And if we drill down to a 1-hour chart, this sell-off does feel slightly overextended. This is an RSI I've pulled up here. We have a bit of a bullish divergence here, so you can see the chart, the price has made a new low, but the RSI has not. You can see if we take this part here, so 24th of June, price was trading up here and the RSI was here, and the RSI hasn't got any lower from there while the price has. So potential for a short-term bounce. We are also at a support level from the 15th of June. So I'm hoping just for a bit of a bounce today, Perhaps nothing too long term, but that's how we play it. It's already started going in the right direction, so I might have to tighten this up a bit. We are going to look to buy. We're going to look to buy US dollar against the Canadian dollar. We'll tighten up that. Our entry can be, what are we trading at the moment? 128.70. There we go. It doesn't give me great risk reward. Maybe we'll target a bit higher. Our stop loss will be down just below previous lows. I might tighten that up a bit just to get the better risk reward. Let's see. How is one? If we move it up a bit, that's way too low. Where is it down there? We'll go with that. It's not ideal. It's kind of already moved. Our stop loss will be at 1.2850 to 1.2851. Let's tighten up a bit. With our profit level at 1.2912. So just a bit of a scalp at support today, and this gives us 2.21 risk reward. Yeah, just looking for a bit of a bounce at support, even though the trend in the short term is pretty bearish.
Okay, thanks for that, Jamie. I'm going to take a look at FX again today, see if I can capture something within the FX world that makes a little bit of sense, and maybe it is I don't know, Jamie. I think I'm sort of like barking up the wrong tree here, but I'm going to go with something. Stop wasting time and energy, and really sort of like try and get a little bit of reward out of sterling dollar. So we're looking at cable. I'm going to look to buy it. It's broken above the Ichimoku cloud, just trading above highest level since we've seen since the 22nd of June at 10 o'clock. Getting long at 123.24. We're going to put a stop at 122. Let's have a 50 tick stop. And looking to target nice little 3-to-1 risk reward, targeting a move to 124.74 today. So that's what I'm looking for. I'm looking for prices to move back up into this previous resistance area. That stop is pretty tight, isn't it? It's on this bar, so probably better to look at this on a hourly chart. Let's change it to an hourly and drag it in. That will expire there. There we go. Getting long there. As I say, levels are buying sterling dollar 123.24, targeting a move to 124.74, and the stop is at 122.74. Very tight and very aggressive.
Yeah, nice, Steve. Like that.
Excellent. So just to finish off, we've got what can we look forward to today? It says we've got US durable good orders today at 1:30. Feels like a funny day for it to come out, but that's what it's saying. Key events over the next week. On the 28th of June, we got US consumer confidence. We've got on the 30th, we've got US PCE prices index. And on the 1st of July, Friday, we got US ISM manufacturing index. That's what we've got to look forward to this week. They're high impact events. And yeah, thanks for joining us today, and look forward to joining you in the week, giving you more analysis, trade ideas, and having a bit of fun, hopefully.
Yeah, good stuff. Have a good week, everyone.
Cheers.